People are getting absolutely ruined by the actions of the central bank, and that is the focus of today's video. The first thing I want to look at is the market crisis that is happening. I will show you the insights, everything from the NASDAQ to what the Fed has done to lumber and so much more. The second thing is the weakness and fear. This is persistent in the market right now. Is it overblown? The third thing is the Federal Reserve members buying stocks. There's a little bit more to it than that. Let's begin. So the Fed released the meeting minutes, and of course the market didn't like what happened. I covered it in the previous videos, I'm sure you know already. Worst S&P 500 reactions to the Fed minutes on record, and it looks like it wasn't so bad compared to some other events. Of course, back in 2008, minus 6.12%. That's big. That's big by any stretch. Look at this. You could see what happened to certain stocks. Tech stocks right now, this is Gamma, the new FANG stocks, and essentially moving back to these levels of what seems to be weakness. You've got Apple charging higher and other stocks charging higher, but if you look at it on a grand scale, things are different. For the moment right now, I just wanted to highlight the fact that this spooked the markets in the short term. There is a massive meltdown in NASDAQ stocks. Wait a second. I thought the markets were heading higher. Well, if you see the NASDAQ composite, that's the black line, it is moving higher. However, already in the top 13% of all days since 1999 of the percentage of stocks down 50% from their 52-week high. So over the last year, okay, think about this. In the last year, these stocks down, so many of them, percentage nearly 40%, down 50%. Now, you don't think about that. You're thinking the stock market's going, what's this GPS guy talking about? I'm clicking off. I'm out of here. No, but you came here for the truth. The stock index is made up of a bunch of different companies. Okay, now, yes, you can buy the index, but understand what makes up that index. And that, when you look at the breadth, what has happened today is showing very serious weakness. The level that we're at today, it doesn't happen too many times. We saw that back in early 2020. We saw that briefly in 2019. You remember what happened there. Looking at this in 2016, there was weakness from 2015 into 2016 as we saw turmoil in China and other countries. Euro sovereign debt crisis, saw that previously, and of course the financial crisis. And then we had that in the dot-com boom and bust. Now, if I show you what has happened here, you're looking right now, the most shorted stocks. These typically, you look at this beforehand, the most shorted stocks would have been the easy buy. Okay, just whatever is the most shorted stock, like Tesla. All right, buy that stock and it's going to do very well. And that really did work for a while. Now today, especially over the past couple months, it has been quite the opposite, let me tell you. Look at what's going on with lumber. You've seen the price come up. Many people, as the price started to come down, oh yes, this is deflation, deflation, deflation. We could absolutely encounter deflation, but all I'm seeing right now is inflation. Yes, the money supply, the velocity has decreased. There's no doubt about that. But in the prices that you pay for stuff, real goods, I'm seeing inflation. European bank stocks are at more than a 3-year high right now. Isn't that weird? Isn't that different? Well, if the expectation is higher interest rates, then banks can make money from that. So who stands to gain? That's right, your friends at the big banks. Bank shares surged 70% in a year to November 2021. Stocks benefit from strong bond yield correlation. Look at this, priced at 8.8 times their forward earnings, whereas US banks 12.9. So they are, when you compare the two, supposedly measured somewhat a little better. And then we have the chart that corresponds to that. Banks in the lead among European sectors. Take a look. You compare that. The orange line is the stock 600 banks, 41% over the last year. Okay, big news right there, because we have to understand what happens on all levels. And that, like I said, I want to talk about what's happening with the weakness and fear that's in the market today. I want to stop for a second and just ask you to support the channel by hitting that thumbs up button. It really does go a long way. Will investors go along with a weaker Fed put? This is what they're saying here right now. And I always find it funny because if the market doesn't, let's say, if the market doesn't go ahead with this, maybe a little less support is going to be okay. If they don't do that, people are going to be ruined. And that's a matter of fact. Pension funds, 401ks, RRSPs, supers, your retirement account is going to be ruined. The direction of the market will depend largely on whether they truly believe the central bank can follow through effectively on withdrawing liquidity. Effectively? I don't know if that's the right word to use. The Federal Reserve is scaring markets with the triple threat of policy tightening. That's big, right? Increasing interest rates, reducing the amount of money that they're printing every month, and then winding down the balance sheet at the same time. Nobody knows what they're going to do exactly, but I just think it's important to see this all outlined in the way they have, and then we'll talk about it as it happens. So far, they've been printing less money every month. Will they go ahead with the next steps? We'll see. I'll let you know. Hit that subscribe button so I can bring that information to you. Quality lasts. Asia's quality stocks continue to outperform, unlike their global peers. So you got to realize this. The whole trade of, I'm just going to buy unprofitable tech stocks, I'm just going to buy Amazon, it doesn't always work. Okay? You have to realize, I'm just going to dollar cost average. Like these things, it might work over a long period of time. You got to watch out what you're doing. You have to be more astute as an investor if that's what you want to do. And looking around, there's always an opportunity. There's always an opportunity, but we have to be aware. So, you could look at the different markets, look at Asia, you could see what happens. Look at Europe, you could see what happens. But look at what Steve Leisman said. And by the way, Steve Leisman, probably the only person who actually asks Jerome Powell, or the Fed chair at that time, a real, semi-real question when it comes to the conferences. So I give him credit for that. I can't let the historic absurdity of current monetary policy pass without remark. The Fed is talking about aggressively reducing its balance sheet while at the same time adding assets to that balance sheet. I think that's the monetary policy equivalent of a dog chasing its tail. Isn't that funny? Really? Think about that for a second. Okay? But that's the world we live in today. Now, I wanted to talk about the Fed. Federal Reserve. Steve Leisman, you just set me up for the next one. Let's talk about it. The maturity schedule of coupon-paying treasuries on the Fed's balance sheet. In all but 3 months through the end of 2023, the redemption cap is less than the amount maturing coupon-paying treasuries that were purchased recently. So what are we saying here? Plain English. The expectation here is that the quantitative tightening is not going to be much of a quantitative tightening. And of course, that's obvious. Once the market realizes this, I think it could reverse. So we're seeing that downtrend. But I think it could reverse. We will see. I'm not 100% convinced at this time, but we're going to look at that. If I can pull this up really quickly, just real quickly, because I don't know if I have time for this. Take a look. See, I know you're looking at a very small screen. This is basically the S&P 500. I have a screen over to my side here. All I'm trying to say is, if you can see this, we are up in this range up at the top where the market looked, needless to say, it was overstretched in the short term. And I specifically called it, there it is, if you could see that. I specifically called it saying, I think markets in the last few days, trading days of 2021, I said, looks a little bit stretched, okay? And then we've had this weakness that has come after. We are approaching a time in which, according to the technical analysis, this could reverse. That could be literally reversing for a couple of days, could be a couple of weeks, who knows? But I just wanted to bring that to you because I've been paying much closer attention to what has been happening. And, well, needless to say, it's interesting to say the least. I will bring you more data on that when I can. Okay. Now looking at this, now that my screen is all messed up, this is what happens when you do things live. Look at this quickly. A Fed official's 2020 trade drew outcry. It went further than first disclosed. Corrected disclosures show that Vice Chair Clarita sold a stock fund and then swiftly repurchased it before a big Fed announcement. Fed Clarita sold, then bought stock fund before the 2020 central bank pledge. So he knew, obviously, what was happening. He sold, look at this, and then literally days later, he buys, and then the market shoots back up. Odd to say the least, because, why bother? It's just going to come right back up. Maybe his initial intention, he didn't realize what was happening up until that moment, and then he thought, okay, the market's going to love this. I'm going to buy. I'm going to reverse what I did. I really don't know. In all of this, it just reminds me that some people do really well, and most people are ruined. Luxury car maker Bentley reports a second consecutive year of record sales as other automakers struggle. So some people are doing better than ever before. What about this? Apple CEO Tim Cook compensation rises to nearly $100 million thanks to new stock award. He's cashing out big time. Okay, and what about this in the cryptocurrencies? Bitcoin and other cryptos slide as global stocks fall on hawkish Fed minutes. Bitcoin, as of this recording, is something like 43,000. It's getting punished. Are people getting left holding the bag, or is this just a dip? That's the question I pose to you. I'm going to end it right there. If you want to support the channel, simply hit that thumbs up button. Let me know what you think. Do you want to see more technical analysis? Do you want to see more news? Do you want to see more geopolitical stuff? Let me know. Put your thoughts in the comments below. I'm always looking at that. I'm always reading the comments. This is a one-man show. I don't have people that are replying to comments and bots doing this and that. I am trying to do as much as I possibly can. If you appreciate that, support me with a like. If you haven't seen this video yet, you definitely want to check it out, right? Just click it and I'll see you there.